Welcome to this episode of Navigate. I'm Jim Dawson, your host, and we have with us today Monica Reyes. She is going to share some interesting news as relates to Colombians. And I think before we jump into the topic for the day, let's have Monica give us a little bit of background about herself, about her firm, and then we'll get into it. Monica, welcome.
Thank you very much, Jim. How are you? I'm
Very well.
really glad to be here and to hold this webinar with you. As I was telling you, Reyes Abogados has been in the market for 18 years now, dealing with Colombians going to the United States and Americans coming into Colombia and having to give them support, practical support with regards to taxation in either country. In order to have an efficient result with regards to our advice, we need the support of experts in the US. That is why it is so important to have you here with us today, because from our perspective, it is very difficult to improvise tax advice with regards to Colombian rules if what you're trying to do is put in place an efficient alternative in the United States and to invent US tax consequences without having a serious, sound advice in the US. In this opportunity, what we have to tell you is with regards to the indirect sales regulations that were put in place as of 2023 and have become a very serious issue with anybody holding businesses through offshore companies abroad. The new regulations affect not only Colombian residents, but also any foreigner holding assets through offshore, through subsidiaries abroad.
Now, you said this is something that just came into effect recently. What's going on in Colombia from a political tax perspective that has resulted in this law?
Well, no, the issue here is that Colombians have been migrating to the US since a long time now.
Mm-hmm.
Most of the people want to ensure that any political instability in Colombia can be solved by transferring both their equity, their patrimony, and their businesses to the United States. And that has become increasingly so now that we have a leftist government, because the fear that most Colombians have is that Colombia turns into something like Venezuela, and that the Colombians have to travel abroad and are forced to leave their country and to start new businesses abroad. So, because that has been in place for a very long time now, it is not new at all. many of the Colombians owning important assets and businesses within the country have structured and transferred shares in Colombian companies to shares in offshore entities. And initially, when they wanted to sell their businesses in Colombia, what they would do was to sell the shares in the offshore holding company with no Colombian taxes being triggered. So there were no Colombian tax consequences. They used to incorporate offshore companies in tax havens, but things have also changed in that regard. Now the CRS rules are defining that most of the transfers in tax havens will be reported to the Colombian tax authorities. And so what the Colombians are doing is basically incorporating offshore companies in the US.
Now, in the past, you mentioned offshore holding companies. Where typically would a Colombian set up an offshore holding company?
The offshore holding companies before, and say that is 10 years ago, were mostly in tax havens. That could be Panama, that could be the British Virgin Islands, that could be Cayman Islands, but that is no longer so because of the exchange of information rules and the CRS, the Common Reporting Standards. So what has become a very common destination is the United States, and what Colombians are doing is incorporating companies in the United States and have been incorporating and creating trusts and other type of entities to hold their assets abroad.
Well, we see a lot of that activity here in Florida, a lot of that activity in Florida, but it's also happening across the United States as Colombians move into the US. So with that being the case, can you give us an example of how you've seen this issue rear its ugly head and impact a Colombian family?
Yeah, the issue here is the following. Many of the structures or investment structures in the United States have been put in place previously when these new regulations on indirect sales were not enacted. So what is important to take into account now is that the Colombian families holding assets in Colombia through offshore entities could be liable anytime that a transaction on offshore entities, that is sales, for example, of shares in foreign companies, of interest in trusts, of interest in foundations, are transferred, and that transfer implies that the ownership of underlying assets in Colombia, shares, immovable property, rights, are also transferred. Because in that case, the new laws establish that the sale will be deemed as transferring the assets located in Colombia for a market price of the asset located in Colombia. and with the cost of the asset located in Colombia, as if the person holding the shares in the offshore entity, be them residents, Colombian residents, or foreign residents, were holding the assets directly within the country. We have seen, for example, that trust structures that were put in place some 5 years ago or something like that, that are already in the hands of beneficiaries that qualify as US residents that have not, that are not conscious that they also qualify as Colombian residents because the assets they hold in Colombia represent more than 50% of their net equity, or because the earnings they receive in Colombia represent more than 50% of the income they receive worldwide, or because they keep their families within Colombia. If that is the case and they are or they qualify as Colombian citizens, and notwithstanding that they've been residing or being residents in the US for a very long time, they still, depend on Colombia for their source of income. In those cases, these beneficiaries qualify as Colombian residents, and any transfer, any reorganization of the trust structure will be subject to Colombian taxes. Even if that is not the case, even if these non-residents no longer qualify as Colombian residents and they no longer hold the source of income or their assets in Colombia, if what they are transferring, if the shares they are transferring in an offshore company, or if the interest in a trust that is being reassigned in a trust in the US represents or is represented in more than 20% by assets located in Colombia, the beneficiary, wherever his residence is, will be subject to Colombian taxes.
And what are the tax rates we're looking at? I mean, what?
Well, it depends. It depends on how long has the beneficiary held the shares in an offshore company or the interest in a US trust. Because if they've held that interest for more than 2 years, then the shares, the taxes that will apply at the capital gains tax rate, which is currently 15%. And despite the fact that the government has filed a tax bill to increase the capital gains tax to 20%, the tax bill is already in Congress and will have to be discussed very soon if it is to start applying as of January the 1st, 2025. But if the interest in the US trust or the shares in the offshore company have been held for less than 2 years, then the income tax rate that applies for individuals at progressive rates ranging from 28 to 39%, and for companies at the 35% rate would be applicable.
And what is the CRS's enforcement activities around this matter? How do they pursue families that owe this tax? Is it on the exit?
Yeah, well, no, it's not on the exit. The fact is that if the family owns any financial product in any of the countries that have signed the OECD treaties, the financial products will be reported to the country where the final beneficiaries are resident.
Okay.
So the CRS rules, what imply is that the Colombian authorities will be aware of any investment held abroad. The US represents an advantage because the US does not belong to the CRS group, and so the Colombians are not reported to the tax authorities in the country. And that is why the Colombians have chosen to incorporate the new offshore companies and the US trusts and the rest in your country.
So take us through the process. Someone comes in and they're aware of this rule. What is the process that you go through in counseling them on steps to take to reduce or avoid, if possible, this tax impact?
Well, that can be very difficult. The issue here is that if you have a structure in place already in the US, any investment structure holding assets in Colombia or earning income from Colombia, it is important that you do not transfer any of the shares in that structure or make any reorganizations that imply a change of ownership abroad, because the change of ownership will trigger Colombian taxes. So if you want to make a reorganization, you have to deal with other transactions that do not imply the transfer of ownership from the present current entities to new entities or new individuals. It is better, for example, in that case, to organize loans or to try to organize financing arrangements that will at the end have the same consequences than transferring ownership, but keeping title on the current owners.
So with that said, how many times a month do you have people coming in saying, "Hey, look, I need some help. I'm not aware of this, and now that it's here, uh, how are
No,
you?
they are
How many people
no, they are still unaware.
are
One of
still unaware?"
They are still unaware, and the American lawyers are not aware at all of the change of the scenario. And so they come to you and they have been used to dealing with Colombian transactions in the traditional way, that is basically transferring title abroad without consideration for any indirect transfers in the country. And then they find out that that is no longer possible. That is why it is of the essence that the American experts take into account these rules before deciding on any reorganizations or any other alternatives. Another thing that has to be taken into account is the taxable base for the indirect sale, because that's another alternative for tax planning. And that is, if you're going to sell the shares in an offshore entity abroad, what the Colombian rules establish is that it would be as if you were selling the Colombian assets held locally. At what price? There is a market value regulation applying under the Colombian tax code that establishes that shares, for example, the minimum price for shares will be 130% book value of the local shares.
Okay.
And that the cost of those shares will be the cost of the local shares in Colombia. So that would be the initial perspective. And so your first approach as an advisor is to find out how much taxes you would be paying under the indirect sale rules in order to understand if it's, first of all, plan which would be the costs, try to adjust and capitalize costs at the Colombian level, because that will be the cost of your transaction abroad. And subsequently, you have to estimate the value of the market value, the deemed market value of the assets in Colombia in order to find out which is the minimum price for Colombian tax purposes. That estimation is of the essence in order to understand what is happening to you when you sell the shares abroad. Because then you can start to make adjustments. Then you can defer the taxes. Then you can condition the payment of the price to certain specific, circumstances that will allow you to defer the payment of the tax during various years. But you have to be aware of the new regulations in order to have a possibility of defending yourself.
Yeah, we've dealt with similar transactions, you and I, over the many years that we've known each other. You have to look at it, a U.S. advisor, whether an attorney, CPA, whomever, that is doing planning for a Colombian family that owns businesses, not just in Colombia, but maybe in the U.S. or elsewhere. We cannot do planning in a vacuum. American advisors, when dealing with Colombian families, need to take into account that bringing in strong Colombian attorneys, accountants, etc., to the table at the offset so that we can see both sides of the transaction before any documents are executed is so vitally important. And it sounds like what I'm gathering from this conversation that is in the past, there might be a lot of oops moments where a transaction was entered into, a restructuring, a sale, whatever it might have been. And then after the fact, the Colombian advisors go, uh-oh, do you know you just triggered this tax?
Yeah. And the problem is that you never know when the tax abroad. But if you're changing ownership, at the end, you will have to formalize that change of ownership for Colombian purposes also, because it's not only that you're changing the owners of the offshore entity, because that transaction will be taxable in Colombia, but it is the fact that the Colombian authorities become aware of that change. And the registration of the final beneficiaries, for example, is in place in Colombia. That is an obligation that you have to comply with every year. And so if your legal representative in Colombia has to report the final beneficiary, well, that report will trigger Colombian taxes because the Colombian tax authorities will start inquiring as to when the change took place and how the change took place. Now, how did the new owners come to acquire the assets in Colombia? So there are so many regulations in place right now. It is just because after Colombia joined the OECD, Colombia became the best student in the whole group because they have adopted every single recommendation that the OECD has formulated. So the issue here is that our regulation, which used to be simple and easy and straightforward, has become very contradictory and very difficult. And there are many controls applying on the investment abroad. It is not like it was before. So that is why the exposure has also increased in a significant way. And when you are organizing your tax planning, you have to be aware that today you have to report final beneficiaries, that the final beneficiaries will be the ones that bought the company abroad, that report will trigger the taxes on indirect sales, that the taxes on indirect sales will trigger or will be assessed on the value of the assets that are being indirectly transferred in Colombia, and so on. So tax planning needs a, a lot of work and it needs a lot of teamwork with the experts in the US.
Very well said. So, in closing, is there anything else that you want to make sure our listeners are aware of when thinking about indirect taxes in Colombia? Anything else you want to make sure they're aware of?
Yes, they should be planning the transfers of shares abroad or interest abroad with the focus of the cost of the minimum market prices applying in Colombia and with the costs of the assets held in Colombia. So that if they start from the bottom and start organizing things from the bottom, they might find positive surprises because then they can organize themselves much better.
And your firm, I know this about you, you're always very, very client-centric, wanting to help anybody and everybody. So if we have listeners out there that their family is in this situation and may need to understand better the indirect taxes in Colombia, of course they can give you a call. we will make sure that all your details are on our website so that people can reach out to you directly. And we do encourage our listeners to reach out to Monica. She will spend the time with you to help you understand what your exposure is, and then she'll help you plan accordingly. But a super, super Colombian attorney in Bogota. I can personally state that she has helped many of my clients over the years, and I know that she would help you too. So with those, any final words?
Oh, yes, that is exactly what I would recommend the Colombians going into the US, that they give you a call before they start organizing companies in the US that will be subject to double taxation in Colombia, that they will be subject to withholding taxes in Colombia that no one is aware of. So it is of the essence that they contact you and that they receive serious, technically sound advice on US taxes.
You are most kind when you share those kind words for Global Tax Focus. We really do appreciate it. And again, I know we will have other podcasts featuring you and other changes in Colombian law. We really appreciate your expertise. We wish you the best in any of your upcoming ventures and for the holidays that are fast approaching. So
Oh,
with
thank you very much, Jim. And I
and
do hope that we can hold a webinar on the structure of construction projects in the US, which I commented with you before. I think that there are various Colombian companies structuring and building things in the US, and it is of the essence that we explore the tax issues arising from those projects together. Hope to be able to meet with you again.
oh, you say hope, but you know we're going to do it, and you're basically giving away one of our future podcasts. So that's okay. That's okay. We can't wait to we can't wait to work with you on that and explore all the possibilities. So again, to our listeners, we appreciate you taking the time, and as always, be safe out there. If you need help, we're a phone call away. With that, we'll say goodbye.